This is less about oil prices, commodities prices, because supply feels comfortable to markets, but about the supply chain and, two words, Suez crisis.
Tina Fordham there at Fordham Global, weighing in on the geopolitical tightrope hanging over the Red Sea as Houthi attacks persist. The US and its allies wondering if a task force is enough, weighing an offensive hit on the rebel group at their nucleus in Yemen.
Bottom line is, these attacks have to stop. They need to stop. They're unacceptable. The United States, our allies and our partners, will do what we have to do to counter these threats and to protect these ships.
This as stalled operations in the waterway continue to ripple out. Ship insurance jumping, oil extending a rally. Let's get to the team coverage. Simon Casey in New York, Kailey Leinz in DC. Simon, first to you. Just on insurance, how much more expensive is it getting for the ships that can go through the Suez Canal?
Well, the costs have almost, in fact, more than doubled since the beginning of this month. If you calculated on the value of the hull to get insurance to sail through the Red Sea now, it's 0.5% of the total value. It was between 0.1 and 0.2 just at the beginning of this month. It's a massive increase in the space of really a week or 2 weeks. And obviously that's putting off a lot of people from sailing through the Red Sea now. We're seeing tankers, oil tankers, LNG tankers, and of course container ships as well. Over 100 container ships have changed route now and are sailing around Africa instead.
Kailey, is a task force enough? Are we finding out quickly that maybe it won't be?
Well, that's the question the Biden administration is grappling with, John. Obviously, this maritime task force was announced just earlier this week, intended to continue the work the U.S. military is already engaged in this region. Those military vessels shooting down incoming missiles and drones, really operating defensively, helping ships that need it. But the question of whether or not this needs to move into offensive territory is what they are now considering. According to Bloomberg's reporting, the administration and together with its allies are looking at actually hitting the Houthi rebels directly at the source in Yemen in order to cripple their ability to go after these commercial vessels. According to Bloomberg's reporting, no decision has actually been made. The administration still would like to pursue diplomatic channels here, but given the disruption in trade flows we are seeing and the real freedom of navigation that is in question, they are under increasing pressure to do more. The issue, John, the issues potentially, though, are many. On the one hand, when we think about the Houthis, this is an Iran proxy. They are backed by Tehran, and the U.S. is really trying to keep the conflict between Israel and Hamas contained to just Israel and Hamas. They do not want this to spread into a broader regional conflict. The other consideration is the Arab allies. Saudi Arabia, for example, borders Yemen. They favor a much softer approach when it comes to dealing with the Houthis for fear of potential retaliation that the Saudis could deal with. So it's a very complicated situation to navigate at this point, John.
Simon, we're talking about how to make it better. How could it possibly get any worse?
Well, as Kailey just pointed out, the administration is at pains to avoid this conflict spreading into more of a regional war. But if we only go back about 4 years, the Houthi rebels actually struck into Saudi Arabia. You may remember they actually temporarily shut down something like half the kingdom's oil capacity for a few days there. The oil market remembers that very, very well. So the nightmare scenario for the oil industry is that the conflict does spread. There are potentially military strikes, as we reported yesterday. Those are under consideration. And the infrastructure becomes a direct target, and that will absolutely not just affect the flow of the oil, it could even stop some of the flow altogether.